This secret New York Killzone strategy that ICT himself has acknowledged will make you a profitable trader, guaranteed, if you stick to this trading plan that I'm going to share with you for absolutely free. My comments have been going crazy with you guys asking me to remake this strategy video because I made it around a week ago and you guys have seen it live that this strategy actually works. Just like I've tested it live, you guys have been testing it live, backtesting, forward testing this, and you guys have seen this strategy work in real time. So I'm here to show you the full trading plan, and the value in this video alone is absolutely crazy. It's a game changer. I've added the most effective yet underrated confirmation that no one on YouTube is sharing. And guys, a lot of people are misleading you on YouTube when they're teaching these ICT strategies because they know themselves that their strategies don't work. However, you guys have seen that these strategies that I'm teaching work. I've been seeing my DMs, my comments have been blowing up with you guys asking me to remake the strategy video. So here I am with a full trading plan for you guys that you can follow step by step, A to Z. Even if you're a beginner, it's very easy. I'm giving away absolutely everything all for free on this YouTube video. So stick around. I'll be showing you live market examples and I'll be going through all the rules of the setup as well. Let's get straight into the video. Let's get into the trading plan and the rules first, and then we'll go into the variations of this strategy specifically. So the New York Killzone strategy, and if you want to pass your funded challenge with us guaranteed and get 1 month free signals to learn off, after you pass the challenge for you, click the first link in the description below. Places are running out, so be quick. Risk management that I recommend. 1% per trade, especially for funded challenges. If you are doing the funded challenges yourself, I recommend 1% risk per trade max, because this gives you enough room for the max daily drawdown and the max overall drawdown. The POIs we're going to be using are points of interest, liquidity sweeps, fair value gaps, order blocks, and market structure shifts. I'm going to go into this on the live market examples. I've got 3 that get harder each time, so make sure you stick around for each one. The trading plan. So the New York Killzone, which is 8 AM to 10:30 AM New York time and 1 PM to 3:30 PM London time. It's only two and a half hour window where we're looking for trades and looking for entries, so it's not long at all. We're going to be utilizing 3 main time frames. However, the main time frame is the 1 minute. However, I'm going to show you a secret hack, and it's literally time frame alignment. This is all you need literally for the strategy. So the entries are going to be off the 1 minute fair value gap in the displacement leg. The stop loss is going to be at the extreme of the displacement leg or at the FVG fill, which is an aggressive hack, especially for high risk reward trades that I'm going to share with you as well. And the take profit is going to be at the next draw on liquidity. Now, for each time frame, I've got a checklist right here that you guys can follow. So on the 15 minute, we're going to look for a liquidity sweep on either side after our session opens. Or just before our session opens. However, I'll run through this with you on the live market examples and on the theory. On the 5 minute, we're going to look for an engulfing, and no one has been sharing this. However, this signifies that the real market structure shift is going to occur. And guys, this is actually a secret hack. This is literally the full strategy being given away. The 1 minute time frame, we're going to look for a liquidity sweep on the correct side. So let's say the liquidity sweep is to the downside on the 15 minute. We're also going to look for the same liquidity sweep in the same direction on the 1 minute. And then we're going to look for the market structure shift, obviously in the opposite direction to the liquidity sweep. I'm very heavy on liquidity sweep and market structure shift. So if you guys haven't watched my previous videos already, go check them out. However, I will go through this on the examples with you. Then our entries are simply, like I said over here, going to be off the fair value gap in the displacement leg. And I'm going to explain whether it's extreme or the main FVG. You'll see on the live examples, okay? So let's get into the rules for the strategy and the 2 main variations. So the pairs it works best on are Euro USD, GBP USD for forex pairs, and NAS 100 and S&P 500 for indices. The time frames we're going to be using, like I said, 15, 5, and 1 minute. And it's very important to actually follow this trading plan, all the rules that I've set over here, and the risk management. We're going to target the opposing liquidity, and we're going to look for the CE entry. Now, what's the CE stand for? This is a secret hack that I've shared on my fair value gap video. So if you haven't already watched the fair value gap video, go watch that, because I explain what the CE is. Essentially, it's the consequent encroachment, which is the 50% of the fair value gap. And this is actually a crazy refinement to absolutely maximize the risk to reward on your trades. And you guys could pass the challenge in just 1 trade with a very high risk to reward, risking 1% with this entry style. Okay, so the 2 main variations. So our session opens over here, like I've indicated. So the main variation over here is there's an obvious liquidity sweep before our session. And at our session, you can see price has tapped into a demand area, which I've marked out order block or FVG. However, the main difference over here is that the liquidity sweep on the 15 minute happens after our session opens, okay? And you'll see this on the live market examples. It's very obvious, it's very easy to follow, and very mechanical. Then I've marked out in the blue here, on the 1 minute time frame and the 5 minute, what we're going to be looking for. As you can see, just simple liquidity sweep, market structure shift, and the entry of the fair value gap. This is basically the same for both variations. Now let's get into the live market examples. However, before we get into live market examples, If you're trying to pass your funded challenge or you're looking to get funded, then this automated trading bot is for you. Most people spend $8,000 to $9,000 in the space of 4 months before they reach their first funded account, but with this bot you can avoid this waste of time and money by letting it pass the challenge for you, 100% guaranteed. Our bot does not miss, it passes the challenge usually in a few hours and the same day, so the day after you could be funded 6 figures, trading live, making real profits. It's a zero risk investment. If you fail the challenge you get a full refund, however we've never ever failed the challenge, so you will be funded. That's 100% guaranteed. Get on this whilst it's still available. Click the link in the description to get funded and don't waste time. Okay, so as you can see, all I've done is delineated the time window and marked out the major highs and lows. So we want to mark out major liquidity points, for example, previous daily low, the main low over here, and the main high over here. Okay, and I've explained the major draws on liquidity in another video, the silver bullet video. So if you haven't already watched that, definitely go watch that because it's also a very good strategy. And I've also explained all the liquidity points and the major liquidity points. As you can see, relative equal lows, trend line lows, you could say trend line liquidity over here. However, the previous day low is also a major magnet for price. Why? Because there's major liquidity sat beneath them lows. Okay, all we're waiting for is a sweep on the major liquidity. As you can see, okay, liquidity was swept on the 15-minute time frame. All we do now is follow the trading plan and go down to the 5-minute time frame. And all we're waiting for is an engulfing in the opposite direction to the liquidity sweep. So because the liquidity sweep was to the downside, we're going to look for an engulfing to the upside. Okay, as you can see, price closed above the previous candle's high, so that's an engulfing. And now that validates the market structure shift possibly on the 1 minute. However, you don't need to guess, you could literally just go down to the 1 minute time frame and just stay on the 1 minute and just look for the pattern. Okay, so now the engulfing's occurred. Now on the 1 minute time frame, you're going to look for the liquidity sweep in the same direction as the 15-minute, and then the market structure shift. So has a liquidity sweep occurred? Yes, with this sweep of the lows right here. Where's the market structure shift? Right here. Price is closed above. This is a valid high, right? A valid market structure shift right now with this high. So now all we're doing is entering off the fair value gap in the displacement leg. Is there a big gap created in this leg right here? No. So we wait for an obvious gap to be created, an obvious fair value gap. Okay. And as you can see, there's a gap right here. However, when you're entering like this, just when the FVG is pretty high up, I don't recommend entering at 50%. Otherwise, you could get swerved, okay? Because if the price hasn't made a fair value gap in the discount, a heavy fair value gap, like a big fair value gap, then most likely price isn't going to reach that low. So price could just run away without you. Now we're going to target the opposing liquidity, which we marked out. So you could just mark out this high, for example, right here, or you could mark out the overall high that we marked out on the 15-minute, okay? And all you do is just let price tap into your area. So we've set our limits, we put 1% risk on here, for example, and we put our stop loss at the FVG fill. So FVG is made up of 3 candles, 1, 2, 3. As you can see, enter at the top of the fair value gap, stop loss below the first candle, okay? And as you can see, price switches in nicely, and we're just going to let price play out on the 15-minute. And remember, we can take profits outside of our time window. However, we want to enter and look for the setup within our time window. And let's see, okay, so as you can see, price smashes our TP for a 1 to 6, and this overall goes for a 1 to round 7, 1 to 8. However, you would take profits at that major high because that is a major liquidity point, and you just wait for the next trading day. That was a solid 1 to 6.5. Let's get into the second and harder example. Okay, so this next example was literally Friday. The first example I showed you was Monday. This example is Friday. So let's get into this one over here. So as you can see, I've rewound it to just before our trading time, so at 8 to 10:30, and by the way, my time is set to New York time, okay? So we're on the 15-minute, and all we're doing is marking out the major highs and lows, and a lot of you will be faked out and will trade this one wrong, and I'll explain why. So as you can see, yes, we got a high over here. You could say we got a high over here with these highs right here. We have got an established low right here. However, people would call this a liquidity low because let's say this is the previous session low, for example. However, what is actually within this low right here and below this liquidity low? As you can see, there's a valid demand area. And what is this? An order block. If you haven't watched the order block video, I do recommend that you do watch that because that is the ultimate basics of ICT knowledge. So you should be watching them, the order block and FVG videos before watching these videos, okay? So as you can see, there's a valid order block. So I would not be looking for a liquidity sweep over here, okay? Instead, I'll be looking for a reaction off this level to take the trade higher. And as you can see, this is a liquidity sweep low that I'll be looking for on the 15-minute time frame. So all we do is wait for the 15-minute candle to sweep, okay? So as you can see, it swept it. And now on the 5-minute, we're going to look for the engulfing in the opposite direction. So it swept liquidity down, look for bullish engulfing. very, very simple, very easy to follow. Okay, as you can see, it took that engulfing out, so that engulfing occurred. Now on the 1 minute time frame, all we're going to do is look for that market structure shift, and as you can see quite clearly, the high over here has been broken over here with this market structure shift. However, if you were waiting for this main low, this liquidity sweep low, okay, and this market structure shift high to be broken, then you can do as well. You can see this is a fractal high. Let's say you just marked out the major high, so liquidity sweep has occurred, and a market structure shift. This is enough of a market structure shift for me because I am more aggressive. I would look for that high to be taken out. However, you can wait for this main high to be taken out overall as well. So as you can see, it closes above that high, so that's a valid market structure shift. Now, where's the FVG in this displacement leg? As you can see, we've got a massive FVG right here, okay, and in line with this, obviously we've got the order block as well, so you can use that as a confluence. And also with this one, you can also mark out either 50% of this. However, because price is already dipping in quite deep into this level, right, of this range, we can just enter at the top, and you don't want to be too greedy because we are on the 1 minute time frame. However, you can mark out the 50% level, okay, valid. The consequent encroachment level is valid, and you could just target the next drawn liquidity, the low hanging fruit, as some people say, as ICT says himself. We've got equal highs right here, okay, and also we could just mark out this 50% fib right here, consequent encroachment. You could also put limits there. However, just to be safe, you want to put it at the top, okay. This is the safest entry. However, just to show you for example purposes, 50% would give you a much higher risk reward. So the same trade over here would give you a 1 to 3.5. This one here would give you a 1 to 5. Okay, so 3.5% over here, 5% over here. You guys can see the difference. So let's take this trade, 1% risk, following the plan. Okay, remember we found the FVG as well in the displacement leg. And you can literally just take profit at the next high, because if you don't want to pass challenges in just one trade, you want to take over a series of trades and prove to yourself that you're a good trader over a series of trades, you could literally just take profit at the next main liquidity point, okay. And as you can see, we've got this next main high, and in this area we do have an area of supply which you guys can all go and backtest yourself. However, let's just see what happens in this area. As you can see, price tanks from there, and again within the window you can take this trade again if you do want. However, let's see what happens. Okay, as you can see, first TP was hit. Let's see if price takes out this high if you were to enter. This is overall for 1 to 8. Okay, and I'd recommend exiting before this supply zone. As you can see, there's also an order block, a clean order block right there. Okay, and this would give you just short of a 1 to 8. And as you can see, some firms have an 8% profit target, so you could literally just pass your challenge in one trade, just entering off the 50% of the fib and actually the consequent encroachment. Okay, so let's get into the last and final example, and this example will be on NAS, and a lot of you will be faked out by this one, so make sure you watch this next example. Just a reminder before we get into the last example, these people were funded 6-figure accounts by doing absolutely nothing. They just bought the service and they were funded 6-figure accounts. As you can see, 200k account, 200k account, 100k accounts, all live, ready to trade on. Now, after we pass the funded challenge for you and get you onto the live funded stage, you can use the free 1-month signals that we provide to learn how to take the trades on your funded account. And a lot of clients have been doing this, and they've been getting payouts from the firms that we pass the challenge with. And when you're on the live funded stage, you can actually get payouts and withdrawals from the signals room, where you can learn how to take the trades on your own funded account. Okay, and as you can see, guys, these people actually funded 6 figures by doing absolutely nothing. They just bought the service, and in a few days they were funded 6 figures. If you fail the challenge for whatever reason, which has never happened before, you will be refunded 100% of the money you paid us. However, that has never happened, and you will be funded. That's guaranteed. The link to the Telegram will be in the description below. However, demand for this is going absolutely crazy, so the prices will be increasing, so make sure you secure your spot before the places run out. As you can see, we've got loads of certificates, loads of proof, loads of testimonials. Join the first link in the description below to get funded, and guys, it's a guaranteed pass. The automated trading bot will pass the challenge for you. After we pass the challenge for you, you get free access for 1 month to the signals room, which is basically a live trading room where you can learn how to take trades on the funded account in real time. So remember, click the first link in the description below to get funded before prices do increase, because the prices will increase, guys. So get it whilst you still can, whilst it's still cheap. Join the group and get funded instantly. Let's get into the last and final example. Okay, so for the last and final example, all I've done here is mark out the previous day high and the previous day low. Why? Because there's major liquidity resting above and below these levels. And I've just marked out this established high, okay, over here that could get swept also, okay. And you could also mark out this low. However, why is this a lower probability liquidity sweep level? Because the previous daily low is right here with trendline liquidity in line with it over here, okay. So people are going to have sell stops below these lows, so I'm just going to let the market do its thing. Okay, we're just going to wait for a liquidity sweep in either direction, and then we're going to wait for the 50-minute candle to close. Okay, so after the liquidity sweep has occurred, we're going to wait for the 50-minute candle to close. Okay, so as you can see, liquidity sweep occurred on the 15-minute. Now all we're going to do is go down to the 5-minute now, and now because liquidity has been swept to the downside, engulfing is going to be to the upside, right? Very simple, very rule based. So now it swept another set of liquidity, which is completely fine. All you do is just wait for that market structure shift and engulfing. So now engulfing has occurred over here. Now on the 1-minute time frame, we're going to look for that market structure shift and liquidity sweep. Okay, so liquidity sweep over here, and you could say this liquidity low as well, and this would be my next market structure shift high. Now all we're waiting for is a closure above this level. Right now this is not a valid market structure shift. Why? Because the body has not closed above. As you can see over there, body is closed above. All we're going to do is mark out the fair value gap right here, enter off it, and what you guys could do is you could put your either stop loss below the FVG. However, because we are entering not in discount, I would recommend putting it below the full low, because we do have other PD arrays right here, which I'm not going to explain now. However, you will know what these are. Okay, as you can see, we've got order block right here, order block over here, this whole order block. So price could dip a bit down, a bit deeper, and then go up. So I don't want to have such a tight stop loss. Okay, then we're going to target the next opposing liquidity. Okay, and also what you guys can do, because price is the FVG has been created pretty high up. So what you could do, because our stop loss is going to be pretty big, is mark out the 50% and enter on the consequent encroachment. And I want to demonstrate to you how this consequent encroachment works with the FVG. Okay, so all you do is enter at the 50% level, and I don't recommend putting your stop loss just below the main FVG, because price could wick you out and then go in your direction. Again, I explained why I wouldn't put my stop loss underneath the FVG low, so put it below the full extreme low, extreme of displacement leg. We don't want an aggressive one, we want a conservative one instead. Take profit at the next draw on liquidity. As you can see, we've got this 50-minute high that we marked out. However, what's the main liquidity point? Previous daily low has been swept. Previous daily high could also be swept. Okay, that's just short of a 1 to 3. And all we do is we let price play out. Right, let's just tick these off. So we entered off the fair value gap. Price has tapped into the fair value gap nicely. Okay, consolidating a bit, but let's see if price moves away. I'm just going to 50 minutes to speed things up. As you can see, price did dip a bit below the fair value gap, but the price is starting to go in our direction right now. And all we're doing is targeting the opposing liquidity, the major drawn liquidity, which is the previous daily high. And as you can see, price absolutely smashes that previous daily high and goes for overall just over a 1 to 3, and even flies even further. So guys, if you do have your daily bias or your overall analysis for this, you could catch these trades. Okay, it's not far-fetched at all, and you guys could actually be making live profits on these by using our trading bot to pass the funded challenge for you, and you could actually take these trades on the live funded stage and make real profits. On a 100k account, if you use 1%, which is $1,000, this will be $2,860 in just this one trade. And how long? 2 hours, and no job will pay that. Okay, for 2 hours of work, more than $2,000, $2,800. This is unmatched. This is why trading is so good. However, you have to stick to the trading plan. You have to stick to your trading plan. You have to stick to your rules, and you have to be disciplined. Otherwise, you won't get these results. And don't expect crazy high risk reward trades on each and every single trade. However, you want a consistent trading plan that provides a positive risk to reward over a series of trades. That's all for today's video. Remember to click the first link in the description below to get funded. And remember guys, once we pass the funded challenge for you and get you onto the live stage, 1 month free in the signals room to learn how to take trades on the funded account. And guys, we've got so much proof, so many withdrawals, so many testimonials. We've got proof of withdrawals in here as well. So you guys should definitely go join this, check this out, and get funded before places run out. That's all for today's video. I'll see you in the next one. Peace.